Be Wealthy and Smart, episode 1421.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about consumer sentiment is at a 6-month high. As you know, that's important because the consumer makes up 70% of the U.S. economy. So when the consumer's happy, the economy is likely or more likely to do well. The latest consumer survey came out from the University of Michigan and showed that consumer sentiment rose in September for the third consecutive month, reaching its highest price level since April. Part of that is due to the Fed lowering interest rates, and partly it's due to expectations for inflation to run lower in the coming months. Joanne Su, director of the university's Survey of Consumers, said this month's increase was primarily due to modest improvements in buying conditions for durables, in part due to easing interest rates. So again, that's a result of the Fed cutting interest rates for the first time in more than 4 years by 0.5%. And that's mainly due to a weaker job market, although inflation is looking a little bit better, yet still above the Fed's 2% target. Lower borrowing costs make it cheaper for American shoppers to buy durable goods such as appliances, cars, and furniture, which are usually bought on credit. Robert Frick, corporate economist at Navy Federal Credit Union, said, even though lending rates haven't started to drop, consumers know that should be coming with Fed rate cuts. Added to already strengthening spending, lower rates and increasing consumer sentiment could be the backbone of a seventh-inning economic surge. Consumers still are expecting inflation in the future, and many are expecting prices to climb at an annual rate of 2.7% over the next year, unchanged from the prior month, according to data out Friday. They see costs rising 3% on average over the next 5 to 10 years, down from 3.1% in the prior month. Expectations about household incomes rose to the highest level since June, and respondents to the survey were more upbeat about the labor market. On the other hand, lower-income consumers continue to anticipate less income growth than those who earn more. So this is really positive news because strong consumer sentiment means consumers feel confident about the future and about their spending ability because they'll have a job, because of lower interest rates, they can finance products that they want to buy. And overall, it just suggests that their spending will remain resilient and help underpin the economy. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.